Mike, you've been on a world tour. You've been traveling a lot for work to see clients. It's interesting to me that U.S. strategists, even you, who are kind of a known bear, think we're going to still go up to 6,500. All these European banks, Barclays and UBS, cutting their targets, HSBC, double downgrade. Do they just see it differently than we do here?
Well, I would say their path has been different, right? So once again, I think a majority of strategists and clients came into the year probably too bullish about kind of the trajectory. And look, we overshot all of our base case targets into last year. We talked about 6,100 as our bull case. We were bullish. First of all, we were bullish in the second half of last year for very different reasons than most people. Most people were bullish because everybody was saying, oh, the economy's great, earnings are wonderful. No, what was going on was the Fed was cutting interest rates, okay? There's an election that we had a clean result in, which caused a lot of short covering and hedging coming off. And we had a recession getting priced out from the summer. So we just overshot. And then we have all these growth headwinds. So what I view is I think a lot of people are just catching up to what's happened. And so now, of course, they're marking themselves to market. We always had a 5,500 to 6,100 target for the first half of the range, for the first half of the year. We hit the low end of that range, so we got to be true to our original call. Once again, we can take out 5,500 in a hard landing. Okay, we're not there yet. I would say the risk of that has gone up. It's probably 35% now. It's probably more like 10 to 20% at the beginning of the year. So that's what we're watching. We're just being more tactical, I think, than most people. Once again, clients right now don't care about year end. What they care about is making money in the next quarter or two. That's our job. And so we've been in the right sectors, we've been in the right factors for the most part, really for the last year. And as I like to say, proof is in the pudding, right? The numbers don't lie. Like our focus list is up 7% year to date.
Right.
So, I mean, that's pretty good. And over the last 7 years, it's up 80% relative to the S&P 500. So,
right.
Those are the numbers, right? The numbers don't lie. And because we've had the right call, not just in the last 12 months, but really over the last 7 years, understanding what's really going on in the economy and earnings, and understanding policy and the impact on valuation.
You mentioned that you're being tactical, and I want to talk about how tactical you're actually being, because there was a really interesting note out from Julian Emanuel from Evercore overnight. He says to buy options when the VIX is low, stocks when the VIX is high. Are you that short term? That seems like a very specific, narrow, you have to be quick on your feet there. Or are you looking out, when you say tactical, maybe a month or two?
Well, it depends on the client, right? So most of our interaction now is with institutional clients who have, time frames from 1 day to 2 months. Most people don't have 12 months. They're not trading their portfolio, turning it over that much, but they are looking to make money every month. And so that's how we gauge it. So it's usually a 30-day kind of window. And we made this call 2 weeks ago when we hit 5,500. Actually, we got literally to the number. And since then, we have rallied to, I think we could maybe rally 5,900, give or take. I don't think we can go to new highs. We're on record saying it's going to be really hard for us to go to new highs until earnings revision breath not only bottoms, but actually gets in positive territory again. And I think that's going to be challenging in the first half of this year. Now, as I mentioned earlier, I think in the second half, as investors start to look forward to 2026, we could see revision factors start to reaccelerate, and that will be when we could potentially make new highs, 6,500. Maybe it's end of the year, maybe it's early next year. Timing is, going to be uncertain.